All right, let's get going. We're going to get going on this first. I'm letting a couple people in here. All right, they're in. Let's go. All right, first time home buyers class. So if you're a first time home buyer, you're in the right place. I'm going to go over from A to Z what you need to do to get ready to buy a home. Whether you're going to buy now or you're going to buy in the future, there's no pressure. I am not a high pressure salesperson. I'm not going to try to pressure you into doing something today, but I'm going to get you ready. You're going to know what you need to do to get ready. We're in such a unique real estate market right now with such low inventory, interest rates that have come up significantly in the last year and a half. And we have people that we have home buyers right now in their homes in less than 3% interest rates. So they don't want to put their homes on the market. So the inventory is so low. So it's very unique and challenging, but I'm going to go through everything, get you ready. So let's get into this class. I'm excited to show you what we can do, and let's go. As a first-time home buyer, do you feel any of these? And I'm sure you feel a lot of these because maybe one or all of them. I don't know why I got this line here. Hold on just a second. There we go. All right. So are you concerned, stressed out, intimidated, anxious, uncertain? Well, that happens for normal home buyers, not just first-time home buyers. And I don't mean normal. I mean second, third, fourth, especially in this market that we're in right now, it is very difficult. So I'm going to try to alleviate these feelings. Change the screen here. All right, a little bit about me. This is me, Sean McManaman, my phone number. This is my TikTok, okay? I know this is kind of weird, somebody my age doing TikTok, but I have been doing it quite a bit. All I really do is I put educational videos out there. So if you want to follow me on TikTok, because I put one out every week and maybe sometimes 2 or 3. I try to be entertaining in a couple of them, but I'm really not entertaining. But you can get some useful information. And as I get more comfortable, I may try to do some more entertaining things. But I've been in the business 24 years, mortgage and real estate, 10 years as a realtor, 14 years as a mortgage consultant. Really, I've been in, doing mortgages for the whole time. Over 1,000 transactions. If you want to book an appointment with me, and this is all over Zoom, this isn't in person, realestatebyshawn.com/book. You may want to take a picture of that, or you can just call me, take a picture of this screen, but I'm available for consultations. It doesn't cost you anything. And like I said, there's no pressure whatsoever. All right, I've been in long enough where I've got quite a few reviews. You can go on Zillow. I don't really use Zillow anymore for reviews. You can go on Google. There's some other places, but I have plenty of reviews. Like I said, I've been doing it for a while. Let's get into the meat of this, because you don't really need to know much about me. So for this current real estate market that we're in, I kind of talked about it a little bit. Let's define the real estate market and what the definitions are. We have either a buyer or a seller's market. We have a buyer's market, which is normally 6+ months of supply on the market, which means less competition to buyers is better for buyers, longer days on the market. It's just better for buyers, buyer's market. Seller's market is 0 to 6 months supply on the market. And when I say supply, number of homes on the market, there's more competition to buy a home and shorter days on the market. If you're selling, this is where you want to be, because your home's going to go quick. Where are we at right now? Unprecedented seller's market. I don't even know how to define it. We are in a crazy market, and we have been we've been in a seller's market probably in the last 8 to 10 years. Okay. But this is a really crazy time where we're at less than 2 months supply of homes in Florida. Now you turn on the national news, it might be different. Different parts of the country is different, but in Florida, we are in an extreme seller's market. We are still less than 2 months supply of homes on the market. That means prices are increasing. There are multiple offers, and we're at the highest rates we've seen in probably about 15 years. And all that combination makes it difficult. We got thousands of people in their homes right now with 3% or lower interest rates. So they're reluctant to put their home on the market until rates come down. So this is going to be a tight market. So what I want to go over is I get a lot of questions since this is a crazy market, and I'm going to wait. I'm going to wait. I'm going to wait. I'm going to wait till rates get better, till values go down. I did a video on this, and it's on TikTok. If you go to my TikTok and subscribe, you'll see the cost of waiting, or this is the YouTube link. Take a picture of this. This is about a 4-minute video. I'm not going to play it for us now, but I did an analysis on the cost of waiting. And the cost of waiting, this is just the first slide of this. To begin with, if you wait till 2025 when rates are supposed to be down lower, you're going to cost yourself almost $40,000 in equity appreciation. It does not make any sense to wait, because our appreciation, I did 10% for 2 years. That's 5% per year. So that's very realistic. If rates go down, we're going to be looking at values increasing significantly, even faster than they are today. So if you can get yourself ready after going through this, get ready and start, buying as soon as you can. Start looking, because it's going to cost you a ton of money if you wait too long. So what are the steps to home ownership? Okay. You hear buy a home, it's better than renting. Obviously it is. So what are the steps to home ownership? Well, first you come to this class and hopefully you learn. And I got people coming in the waiting room. Sorry about that. And pre-approval with your mortgage lender is the first step. People start looking for homes without being pre-approved. Pre-approval is the first step. Mortgagesbysean.com is my website. You can go to apply now to apply if you're ready. You need to get a full pre-approval. That is the first step to any of this. Then once you get pre-approved, then you start looking for a house, search and find a house. You got to have a good realtor too. That's another thing. You got to have a good realtor representing you. You will offer and negotiate a price once you find that house, go under contract, home inspection, then the appraisal, the underwriting and full approval. Then you'll be ready to go sign the closing documents at the title company, and you move into your first home. It sounds great and it sounds quick, but the reality is that's not how it works. I have some down payment assistance programs, and I want you to understand this. When you hear down payment assistance, and that's for first-time home buyers, it doesn't mean that you've got to make very low income to qualify. Down payment assistance really means that you're getting money for a down payment or closing costs, and it's not free. They don't give you the money just to keep and you go away. These down payment assistance programs, they have a payback method on them. A lot of them will just be recorded against the house you're going to buy, and it's a silent second. You never have to make payments on it. So there's different types of programs. Stay till the end, because I'll go over the programs that are available to first-time home buyers, and there are plenty of them. So this is the first mistake people make when they're wanting to buy a home, and that is not getting a full pre-approval. And I mean full pre-approval, the way it should be done. I'm going to go over that. The first step is you got to get your true credit scores. Okay. I talk to people all the time, and I hear, well, Credit Karma tells me my score is this, or my credit card company or my bank, tells me my scores are this. The reality is Credit Karma and other consumer sites do not give you the correct credit scores. They use what's called the Vantage model, which really makes your scores look better than they really are as far as mortgages are concerned. Okay. We want to get you a mortgage credit score so you know exactly what you're dealing with, not the Credit Karma. You need the FICO scoring model, which is what we use in the mortgage industry. We pull 3 bureaus for a pre-approval, okay? You can't just pull one and say, well, you're good. You got Equifax, TransUnion, and Experian, and we take the middle of the 3 scores to qualify you. So we throw out the high score, we throw out the low score, and we use the middle score, whether that's Equifax, TransUnion, or Experian. They all have their own scoring models, but for mortgages, they use a version of the FICO scoring model, which there are several. Okay, so you're going to want to make sure that you know exactly what your true credit score is. So a way to do this, and people will say this to me, I don't want you to pull my credit because it's going to hurt my score. I've got a video on that on YouTube and on TikTok about the true story behind what happens when your credit gets pulled. It's not an automatic deduction, okay? It all depends on your credit profile. You know, if you're somebody that has a lot of inquiries recently, yes, it may affect you. Or if you have somebody that has some problems on your credit, yes, it may affect you. So to alleviate that, I can do a soft pull. That means it does not have any record on your credit report, but we can't use a soft pull to qualify you, but I can get an idea where you're at. For a lot of you on this call, this is the first step to go. So let me do that soft pull, and it won't hurt your score, and we'll see where you're at. And schedule, so you'll schedule a time with me, and then we'll, you know, go to realestatebyshawn.com/book, or call me or text me, and we'll set up a time and we'll do the soft pull and we'll see where you're at. I can give you a roadmap of getting ready to buy. You may not be ready today. I may have to tell you that, you know what, it's going to take you a while, but I will get you ready. I can promise you that you can stop paying rent and paying somebody else's mortgage. One thing I have to offer is that if you need it, you may have to go into credit repair. And I know that's a word that a lot of people don't like to hear and they're afraid, but credit repair done correctly and done with the right company can work. It can take up to 3 to 12 months depending on your scenario, but it can take that long to raise your credit scores depending on how many trade lines are involved. But credit repair is an option. You know, and you may be so close to being able to qualify that I can give you certain things to do on your report that will get you to your score a lot quicker. So the bottom line is, let me do the soft pull, okay? If you need to get into credit repair, I can get you into credit repair, and the cost of the credit repair, which is not very much, I will make sure that you get that money back at closing if you use me for the mortgage. So you really have no risk whatsoever. This is the website to the credit repair. If you're interested, I'm not pushing anybody to credit repair, but if it's something that can help you, because the money that you save in interest, when your score goes from, you know, the 500s to the 600s to the 700s, the interest is significantly better. And that's not just on a mortgage, that's on a car, that's on a credit card, that's on anything. So go to this freedompath.com/credit-by-Shawn if you want to. Just look at it. You don't have to get involved in it, but we need to get you an idea where your credit score is at. And then we can go from there. Maybe you'll need credit repair, maybe you won't. Maybe there's a few things. I did a video also on the 3 things you can do today to raise your credit score. And it's very simple. And I mean, it costs very little or nothing to do that. So first step, remember, get pre-approved. Once you know your score and you know you're in the ballpark, let's get you pre-approved. Do not start a home search until approval, because you're wasting your time. You don't know what you can qualify for. There's different terms that get thrown around. One's called pre-qualification, which is a verbal, and it's really no good. It's a waste of time. You can't buy a house with it. You can't even put an offer in on a house. What a pre-approval is it's I get your documents, I get your credit, we do a hard pull, then we send you through what's called automated underwriting, which I'll talk about in a little bit, and we get your income and asset documents. So we know that you're pre-approved. There is something called a full approval that we can send. It's called a TBD approval that we can send to underwriting. That's not done as much unless it's a real complicated situation, but the minimum is pre-approval. You will be approved for a payment and a loan amount, not necessarily a sales price. The loan amount will equate to a sales price depending on how much money you put down, but we'll get you approved for a loan amount because every house is different. Some houses have higher taxes. Some houses have higher insurance. Some houses have HOAs, so you're going to get pre-approved for a mortgage amount. And then we'll talk about sales price and get you going. But pre-approval, I'm going to say it 100 times in this video, is the first step, and it has to be done. There's no other way. Let's go over some of the loan amounts or the loan types, okay? What you're going to get approved for. When we get you pre-approved, we're going to say you're pre-approved for this type of mortgage or that type of mortgage, and that requires different down payments. So the first one is FHA because it's the most popular for first-time home buyers. It is not a first-time home buyer only program. Anybody can get an FHA. So what an FHA program is 3.5% down, 580 minimum credit score. Now I can go lower in certain situations, but look, you don't have to have 700 credit to get a FHA mortgage, and you only have to put 3.5% down. The loan amount, there's a loan limit though, $472,030 is a limit in the Tampa Bay area and our surrounding areas. So anybody who is a first-time home buyer most likely doesn't have to worry about this. The debt ratio allows for 55+%. That's high. That's flexible. That's perfect for first-time home buyers. PMI, MI, if you don't know what that is, whenever you put less than 20% down, you got to pay PMI. But at FHA, you got to have PMI at all levels. So that is kind of a little negative, but not much. The PMI rate, this is math, and you may not need to know this. I mean, I'll go through all this, but the PMI rate is 0.55%, which basically means take your loan amount, multiply it times 0.55%, which is 0.0055, and divide it by 12. That's your PMI payment. You don't really need to know that. I do that for you. And there is an upfront funding fee or upfront MI fee, not funding fee, but upfront MI fee of 1.75. That is financed into the mortgage. And then there's conventional. Conventional is a little different. You can get in as little as 3% down if you're a first-time home buyer. You got to have a higher credit score for conventional to work, and your debt ratio has to be better. But sometimes it can work. For the most part, conventional loans are for 5% down. You got to have a minimum credit score of 620. But the reality is, for pricing, for interest rates, you need it to be around 660 or above, or the rate's so high, then you go back to FHA. FHA has better rates at the lower credit scores than conventional because they're a little more expensive. But once you get above like 720 in your credit score, then conventional is where you're going to want to look. The debt ratio is more limited. It doesn't go above 50. If you put down less than 20%, you got to pay PMI. If you put down more than 20%, you don't have to have PMI. The credit score and LTV determines what the PMI rate is, and there's no upfront funding fee or MI fee for conventional. So it depends on your situation. If your credit score is high and you got some money to put down, then conventional might be the way to go. Then the last one we're going to talk about is a VA. That's for veterans and for active duty military. If you're not that, you can't get the VA. But VA offers 0% down, 580 minimum. I can go lower if needed. 726,200. I didn't mention that on conventional. That's the max loan amount on conventional in our area. 55+ debt ratios. There's a lot of good things about the VA. There is an upfront funding fee of 2.15. You don't have any PMI with VA, but you got to be a veteran or an active duty military. So these are the three loans that we focus on. There is a loan called a USDA that's 100% financing, but really depends on where you got to buy in more rural areas. If you're in Pasco, Hernando, we may be able to get you USDA. I'm not going to go over that now. All right. So what are the three pillars of a mortgage approval? These are the things that are the most important. Okay. And they look at your credit, they look at your income, and they look at your down payment. Those are the most important parts of getting approved. And I mean approved by underwriting. So how are approvals determined? First off, Remember that desktop underwriting automated system, which is an algorithm. I told you everybody has to go through this automated system first. And for the most part, you got to have an approval through this. There are cases where we can do what's called manual underwrites, but really you want to get through DU and LP, which is what it stands for, to get your approval first. And when we do the pre-approval, we run it through this first to see if there's any issues. There is an algorithm. We don't know exactly how that works. I do know by looking at credit and income profile if you're going to have a hard time getting through automated underwriting, but that's the first step. Credit score. The higher the credit score, the more flexible approvals become. That's obvious. If you have really high credit scores, they will make exceptions to things they won't on lower credit scores. Your income is very important, and how you get paid is very important. You know, because there's salary, hourly, commission, overtime, bonus, self-employment, then a combination of these sometimes. So income's very important. Job stability is important. Not as important as it used to be, but it's important because, you know, if you need an exception, if you've been at your job for a while, that really helps. Down payment, the bigger the down payment, the more flexible the program is, obviously, because there's less risk to the lender of you foreclosing. This is a game. Getting approved is a game. And the game is you as a buyer have to win the game and convince them that you are not a foreclosure risk. Okay, that's really this whole thing. And the more money you put down, obviously, the less likely you're going to foreclose. So you don't have to put a lot of money down. I mean, we do FHA 3.5% down, 100% down programs all the time, but it does help if you have a bigger down payment. The more money you have in reserves after you close, that can help too, because there's less risk on that. So those are kind of how the approvals are determined. They look at all those factors. They all don't have to be perfect, but those are the factors that go into it. I got a question that says, when you get a chance, can you please explain the debt ratio? And I will, definitely. All right. So when you buy a mortgage, you have down payment, right? And I went over that, the percentages. So let's just say you're buying a $400,000 house and you're going FHA. So it's 3.5% down. So you have $14,000 as your down payment. Well, then you have closing costs too. Okay. It's never just the down payment. And we're in a market right now where sellers are not paying closing costs for the most part. Other markets, yes, sometimes you can get the seller to pay. Most part now, no, it's not going to happen. So if you're not in competition with other buyers, maybe we can get the seller to pay some costs, but closing costs are the costs that the buyer has to pay to obtain and close on a mortgage. There's no such thing as a no closing cost mortgage, despite what you might hear. Sometimes lenders will advertise, not so much now because the rates are so high, but there's no such thing as a no closing cost. We can do loans where we limit your closing costs or we pay some of them, but what happens is that means your interest rate is higher. So there's no such thing as a free no closing cost mortgage. Typical closing costs, these are the names of them. You got lender fees, and these are the name: origination, discount, processing, underwriting app. There's a lot of different names, okay? You'll have third-party fees, which is an appraisal, a survey, termite inspection, credit report, flood certification. Then you're going to have title fees. No matter what, on a mortgage, you have to have title insurance. You have to have title. And these are the fees that title companies charge. Then you have your state and local fees. Government wants their part. Doc stamps on the mortgage, intangible tax, recording. So those are the typical closing costs. Generally, they run between 2 and 3% of the loan amount. Okay. So you got the 3.5% down. Then you're going to have maybe another 2% for closing costs. So you can see how that can add up. That's why we have these first-time home buyer programs. Now, in addition to closing costs, or part of closing costs, a lot of times when you see estimates, these prepaids and escrows are included in the closing costs, but they're really separate, okay? Prepaids and escrows are like taxes and insurance. Okay. You got homeowners insurance. When you buy a house, you got to get insurance, and you have to pay 12 months of premium at closing up front. Then you have to escrow 3 months for the next year for the lender to pay your insurance. You're going to have flood insurance if you're in a flood zone. And then property taxes, got to pay property taxes. You're going to escrow 4 months at closing. Then you have prepaid interest. This all depends on the day you're closing. If you close on the last day of the month, which everybody tries to do, you do not have to pay any prepaid interest. If you close on the first day of the month, you got to pay the rest of the month's prepaid interest. Okay. Now, when you get a mortgage, let's say you close, we're in August right now. Let's say you close at the end of August. Okay. August 30th, your last close, you close on that day. Your first mortgage payment will not be due till October 1st. You always get 1 month in between when you close to when you make your first payment. So you never close in August, or you really shouldn't. I mean, there's limited situations where this happens, but almost never close in August and have your first payment September. That just does, you always get September off and then October. You always have a month in between. That's why you have to pay prepaid interest. Generally, these prepaids, it's really closer to 1%. I just said 1 to 2%. So you have closing costs and prepaids and escrows, a total of about 3.5 to 4% of the sales price is how much you have to come to closing with, in addition to the down payment. So what's mistake number 2? Not having a buyer's agent. This is something I see all the time. And when I was selling real estate, I just couldn't understand why people would not have a buyer's agent, a real estate agent for themselves to represent them. You must have a buyer's agent representing you. Do not go directly to the listing agent. You won't get a better deal. I hear that all the time. I'm just going to call the name on the listing sign or the name on Zillow or the name online. In the listing, I'll get a better price. No, you won't. They may have a little flexibility, but you will not get a better price. That is a guarantee, because the listing agent, they're going to get both sides of the transaction if they represent you and the seller. So you normally pay 0 in commission when you have a buyer's agent. The only time you pay anything is if they charge like sometimes they charge a transaction fee that's minor, but the commission's paid by the seller. So you might as well take advantage of your own agent, and I can recommend agents to you. Your buyer's agent will have your best interest in mind. Your buyer's agent will handle any issues with price, inspection issues, title issues, etc. There will be issues on your transaction. There is no doubt about it. And you need somebody that is in your corner to handle these issues. So get a buyer's agent. So once you get the buyer's agent, you got your pre-approval, start your home search. And your home search is going to be based on the approval. Now, here's something important. Your approval, what I can approve you for, may not necessarily be what you're comfortable with, what your budget is. I can say I've got you approved for a $400,000 mortgage, which that means you can buy a $450,000 house, and you say, and your payment's going to be right around $4,000 with everything a month, and you're not comfortable with that. You can afford it, but you're not comfortable with it. So you always got to evaluate that. You're going to, when you look at a house, taxes, HOA, flood, all that's going to come into play. You know, every neighborhood's different in taxes and HOA. So all these things go into your home search: the location of the property, the type of property, single family, condo, townhome, and your mortgage program may dictate that you really shouldn't be looking at condos. So you got to kind of, you know, when you're looking at houses, your realtor will help you with this. I will tell you, if you're in an FHA, don't look at condos, or I'll make sure your agent looks at the condos that are approved on the FHA list. Do not look at Zillow, Realtor.com, Redfin, or any of these online sites once you're in the process. At this point, when you're dreaming or you're just looking and just for fun, you can do that. It doesn't matter, but these are not real-time sites. The homes are going on and off the market so fast right now. You need real-time information, and Zillow definitely doesn't give it to you. Realtor.com's close. Redfin, no way. So don't waste your time. Get your realtor to set you up with an MLS search. And the MLS search will give you a lot of different criteria. You may want a pool. You may want the house to face a certain way. Believe it or not, I've seen that. There's so many different characteristics that you want in a home that only MLS will allow you to do. So Zillow and these other sites are kind of limited in what they'll let you look. So go find your dream home. Okay. You've got pre-approved. We're going to get you going. So once you find that dream home, you are going to go under contract. And once you go under contract, you just say you find the house, you've got pre-approved, you find the house you like, put the contract in, they accept the offer, you are on your way to closing. Most likely 99.9% chance you're going to go under with an as-is contract. What that means is that the seller is not required to make any repairs, but you as the buyer have the right to request repairs, but they don't have a contractual requirement to do those repairs. That's all as is means. But every seller out there will make repairs if needed to sell the house. So once you go under contract, you deposit money into the escrow account, usually 3 days. That escrow money is usually around 0.5% of the sales price. So $400,000 sale price, you're looking at $2,000 in escrow. That escrow money is used at closing for your down payment and closing costs. But you got to be careful because escrow money is at risk. If you do anything to violate the contract, if you do not follow through on the contract, you will lose your escrow money. So that is very important that everything is done by the book. You'll have me to hold your hand and your realtor hold your hand and make sure that this escrow money is not at risk. You'll get with your lender, which will be me, and submit your documentation as soon as you go under contract. We'll have a lot of this stuff done prior to, and time is of the essence. Contracts are usually 30 days, okay? So you go under contract, you have 30 days to close, or you can lose your escrow money. You do not start shopping lenders at this point. You've got to be, the lender that you're going to use is the one you got to go with. You can't change at this point. It's too late. Your escrow money is at risk if you don't close on time, because if you don't close on time, meaning if you do something to delay the mortgage process or something happens where you ghost us or something, which happens sometimes, and we can't get a hold of you for certain documentations, and you get down and we're ready to, and the closing date is approaching, your money's at risk because the seller can just say, okay, you're not closing on time, we're going to keep your money, and then we'll move on to another buyer. So that's very important. Now,
hey, hold on. You hear me?
Hello? Yes?
Okay.
Okay. All right. So schedule inspections. So what happens is once you go under contract, you will have an inspection period. So you have a 10 to 15 day period, whatever the contract states, whatever you guys have negotiated, you have 10 to 15 days to back out, basically. Okay. And you're going to do an inspection during that time. And if you don't like something on the inspection and you try to get the seller to do it and they don't do it, you can back out. Okay. That's your free look time. And it'll depend on the contract. Most of I see right now around 10 days. So you got to get moving. Your realtor will help you get an inspector. So you'll get all that set up. And what happens is they'll do a wind mitigation at a 4-point. That will help you determine what your insurance is going to be, how old the roof is, that kind of stuff. Then you're going to do a pest inspection. That's not required by all lenders or all loan programs, but we're in Florida. You're going to want to do that. And then there's miscellaneous inspections depending on the house. So this is the process. You are in contract right now, moving towards closing. You'll negotiate, like I said, you can negotiate the repairs, required by the inspection through your agent. And the sellers most of the time do them because they don't want to put it back on the market. All right. So the mistake number 3 that people make is skipping waiving the home inspection or appraisal. I just told you how important that inspection is. I'm not going to go through all this. If you don't do a home inspection, you're really at risk, because there could be all kinds of things wrong with the house that you can't see. So do not, and no matter how much you love the house, do not skip it. You got to have that. So once you have the inspection, you accept it, it's good. Be diligent and responsive with me, your lender, because we need documents ASAP. The appraisal is ordered then. Well, really now in today's market, the appraisal is ordered up front. And what the appraisal is it determines the value of your house. Inspection determines, is it in good shape? Does it need repairs? Appraisal is what is needed to see if it's value. If you put a $400,000 offer in on the house, then is it worth $400,000? It's required, no way around it. You'll get your homeowner's insurance set up. Once you do your inspection, you're going to want to get that homeowner's insurance set up. You'll give your insurance company the wind mitigation and the 4-point inspection. You'll get your flood insurance if necessary, if you're in a flood zone. So those are the things that you never ignore the inspection, or don't do it. This one is, it doesn't make sense so much grammatically. The mistake number 4 is ignoring the don'ts list. And I go through everybody with everybody in the beginning. These are the things you cannot do once you are under contract, and you cannot do right before contract, because it will jeopardize your whole approval. First one, once you go under contract, or even right before you go under contract, do not apply for any additional credits. Any credit cards, store credit cards, auto loans. You'd be surprised. People have, I talked to them on the phone during the process. We kind of say, this is what's going on. Everything's going well. You're in underwriting. And, oh yeah, I went out and I'm looking for a car. You never do that, because you're gonna mess with your debt ratio. Or I get people say, hey, we're going furniture shopping, so we went to Rooms to Go and we opened a credit card. No, never, ever, never do that. Or an installment loan, okay, of any kind. No loans, no credit cards, no nothing during it. You just lock everything down when you're going through the process. You do not change jobs. I mean, do not do this. I've had this happen. I've had it happen many times. People think, well, I got a better job, so I can do that during a process. No, you cannot. I mean, if you absolutely have to take a job which is a better pay in the same line of work, you got to let me know, because we can maybe make it work then. But if it just, I've been on the phone with somebody and they tell me, well, I just got a better job for more money, and we're a week away from closing. That's a major problem. So never change jobs. Don't take a leave from a job of any kind, no matter what. I mean, unless, if it's a pregnancy or sickness, then just let me know, because there's things we have to do to ensure that that job is there for you when you come back. And it can definitely jeopardize. Don't get any large deposits in your bank accounts. And this really confuses people. And I understand why it's confusing, because why does it matter? But it matters to lenders, all lenders. You cannot have large deposits. You have to document those large deposits into your bank accounts. You cannot get a gift without letting me know. If mom or dad or another family member is going to help you, you have to let me know. So do not get large deposits. And I mean, what large is more than what you normally get in your payroll, your paychecks. Anything bigger than that, we got to explain, we got to document. So never do that. And again, this is kind of redundant, but have your credit pulled from anywhere. Okay. Now, when you go to get homeowners insurance, they're going to probably pull your credit as a soft pull, and that's okay. Or if something like that needs a soft or something, I don't know what else it would be, but if it's a soft pull, just let me know about it just in case, but don't have your credit pulled for anything. So you got the don'ts. Now let's go over some math. Okay. And math meaning I'm going to kind of show you what a breakdown in payment, what a breakdown in down payment. So don't be discouraged by this, because there's things we can do to help. Okay, this is going to be an FHA loan, which is mostly what's happening now for first-time home buyers. You have a purchase price of $350,000. You know, it depends where you're buying, if you can find something like that. But let's say you can. Down payment, 3.5%, $12,250. Loan amount is $343,660, which it's a weird number because remember I showed you on FHA the upfront mortgage insurance that's rolled in. That's where this comes into play. So that's your loan amount. Closing costs going to run you roughly $6,500. Prepaids and escrows roughly $4,800. So your cash to close on this $350,000 is about $23,550. That's everything. Okay. Remember, just the down payment is not enough. You're going to need to budget for closing costs, prepaids, and escrows also. So that's your cash to close right there. What's your payment going to be? Well, right now, FHA rates are running around 7%. So let's say 6.75. Interest rates change every single day. And sometimes rates change throughout the day. So if you're ever shopping for a mortgage, and if you look at my video, I do a video on shopping for a mortgage too, what to look for and what not to be, you know, because sometimes lenders will make their estimates look better in certain ways where they're really not. Interest rates change every day. So what you talked to a lender about 2 days ago is no longer valid. Okay. They change. They're just like the stock market. It's market driven. It changes every day. So just understand that. Principal and interest at 6.75 is $2,229 a month. When you're getting a mortgage and you're getting an FHA mortgage, you got escrow. So you got taxes of $208 a month, insurance $250 a month, PMI, the MI $158, and we have total PITI. This is what this is called. That's your total payment. Okay, $2,845. Now, understand this also, that these numbers right here, your escrow numbers, vary depending on the house. Sometimes the taxes are lower, sometimes the insurance lower, sometimes they're higher. So the only thing fixed in your payment forever is this, $2,229, because taxes go up, insurance goes up, PMI, well, PMI won't change, but those are the things that are fixed. You can always refinance. So here's something to understand. Rates are higher today. Yes, I hear it. And a lot of you were conditioned to hearing 3%, 4%. We're not going to see that in our lifetime again, 3%. There's a reason why we were down that low into 2s and 3s. It's technical. It's because the Federal Reserve was keeping rates down by buying mortgage-backed securities. They're no longer doing that. They did that coming out of the Great Recession in 2007 and 8 when everything crashed. That's not going to happen again. Okay. So understand, if we can get into the 5s, that's going to explode the real estate market even more. So buy now, refinance later. You can refinance the rate. You cannot refinance the value. The values are continuing to go up. So let's find you something that you can afford, and then find that house and get into it and refinance later. Because if you do a mortgage with me, I do your refinance at a significant discount where it doesn't really cost you very much. So believe me, it's worth it. So let's go over those down payment assistance programs. I'm gonna be taking questions here shortly. So what I said before, down payment assistance doesn't mean you got to be broke or that you can't be making. The Florida programs, you can really make up to $80,000, $90,000 a year and still qualify. And then I have some down payment assistance programs that it doesn't matter how much you make, you can qualify for them. So let's go through them. And you probably heard of these. Hometown Heroes program. This is a program that used to only be for first responders and doctors and nurses and firefighters and police and that kind of stuff. Florida opened up the Hometown Heroes programs to everybody. So you can get up to, you can get 5% of the loan amount up to $25,000. There's a lot of requirements for it. Right now, the Hometown Heroes program is almost running out of money. We're about 3/4 of the way through of the money. So if you want to buy today and want to get this Hometown Heroes program, I'd jump on it now. Will they up the money? Who knows? We have a governor. I don't know what he's going to do with certain things. He at least authorized $100 million for this Hometown Heroes program, but I don't know what's going to happen going forward. So that's one of the best programs out there right now. Okay. We have what's called the Florida Assist program that gives you up to $10,000 in assistance. First-time home buyer, you got to be a first-time home buyer for both of these. So you cannot have owned a home in the last 3 years, cannot own the primary residence. You got to have a 640 credit score. It can be used for FHA or conventional. The income limitation says approximately 72,000. It's more like 88,000 now. I should have changed that from when I did this a year ago. So the income limitations are good and can be used for down payment or closing costs. Now, the way this works with these down payment assistance programs, they get recorded against your house that you're buying as a second mortgage, but it's a silent second, meaning you don't make payments on it. It just sits there. You have to pay it back once you sell the place, but it's a great deal. It's a free money. So why wouldn't you take advantage of 0%? Silent second, no payments required. That's pretty much all down payment assistance programs. There's very few programs that are quote unquote grant programs where it's given to you. That's where your income has to be severely restricted, and to find something to qualify for that's very difficult. So if you sell your house or refinance, you got to repay it. It'll be part of everything. Now, if you're refinancing in the future, your value will have gone up and you'll be able to do that. We have a 100% FHA program, okay, which means zero money down as a down payment assistance. And this 100% FHA program allows people that are not first-time home buyers. You can be a second-time home buyer, still qualify. So this 100% FHA program is a great program. That's the first step I would look at for somebody that is a first-time home buyer that wants to buy. We're going to look at this program, but we have this 100% FHA program, it has like different arms. There's so many different ways I can go with this, so many different lenders, depending on your situation, your credit score, your debt ratio, all this stuff. So I have a lot of flexibility. So if you think you want to get ready and let's get you into one of these programs. There are also local programs that are available, but it just depends where you're at. But there are several programs available. So you may still feel this way because this was in the beginning, but at least you're a little more educated now. So you want to make this happen. You want to see where you're at. Just book an appointment with me. Like I said, it's Zoom. We don't do in person really, unless you want to. And in my area, I'm actually in Clearwater area. We can meet in person if you're comfortable with that. I have no problem with that, but most people want to do Zooms or phone calls. So you can book a call with me. Just, go to this website. It'll look like this. You'll pick a time and then get with me. I put them in half-hour blocks. If you need more time or shorter period of time, we can do that. So let's do some Q&A now. So there's so much more to it. That was just the overview of the basics. Okay. So this is my contact information. Take a picture of this. You can have it forever, whenever you're ready. If you're not ready now, I understand. I mean, a lot of people aren't, but there's a lot of people that don't know where they're at. So remember when I said, let's look at that soft pull. Let's look at pulling your credit at least. Let's do it. Let's get you into something, or see where you're at and kind of map it out for you. We're going to get you ready to buy in 3 months, in 6 months, in 12 months, whatever it is. There's no pressure. I mean, I don't pressure people. I'm not a high pressure salesperson. I'm here to help you, to get you ready to buy your first home. Because if you're renting, excuse my French, you're pissing money away every month. You're paying your landlord's mortgage. You're paying somebody else's mortgage, and it doesn't do you any good. So let's get you ready. Now let's take some questions. Let me go back up here. Okay. That question back to the debt ratios. How do they figure debt ratio? Okay. So what you do, take your gross income. All right. Let's say you make $60,000 a year. You take everything's monthly, divide that by 12. That's $5,000 a month. We take your gross income. We do not take your net. We take your gross. Okay. Let me start my video again. I'm still here. So we take that $5,000 is your qualifying income. So we add up your monthly debts. Okay, whatever those are, credit card, car payments. And when we do credit cards, we're doing minimums. Okay, your minimum required. If you pay more, we don't care. We only want the minimums. Then you add those minimum monthlies and you add your new mortgage payment, okay, your total PITI, and then you divide it by 5,000. So let's say your total expenses with your new home, and that is, let's say it comes to let's say 2,100. Okay. So we would then do 2,100 is your total debts divided by 5,000. That comes out to 42%. That's your debt ratio. That's called the back end ratio. There is something called the front end ratio. I'm not going to go through that. You don't need to be worried about that. But the back end ratio, divide all your monthly payments and then add the house payment to your total gross income. So that's how you figure out the debt ratio. Hopefully you got that. If you need more clarification, I can definitely do that. How much is a large amount? I'm assuming that means a large deposit. Well, anything above in your bank accounts, remember I said we got to verify any large deposits. That's anything above what you normally deposit for your payroll. So anything above that, we're going to have to verify. And when I say verify, we have to source and season. So we got to, where does that money come from? You know, is it an eligible source? It does get complicated, and I know it's stupid, but it is the way underwriting is. And it's a rule that's been around forever. And I think eventually they're going to get rid of it or revise it. But right now it's in place and it's going to be for a while. How does it work with VA loans? So overview of VA loans, like I said, it's 100% financing. You got to be a veteran. You've got to, or a active duty military person, and we can get you into a VA loan. It depends on what you're eligible for. Your certificate of eligibility will tell me that, but it's 100% financing. So 0 down, and there's no PMI. You got an upfront funding fee, and the rates are good. It's the best loan out there. I wish that Fannie Mae or Freddie Mac or some of these other agencies would come up with 100% financing mortgage, because the VA has done it forever, and they don't have a ton of foreclosures. So I don't know why others can't do it. But if you need any more information, just let me know. All right. And yes.
So my question had to do with the debt ratio.
Yep.
The 55 plus. What I'm trying to understand is what is the acceptable debt ratio based on the numbers that you gave with that $350,000 house?
So you'd have to have a debt ratio if you're going FHA. 50% or 50 to 55 would be the max. So $350,000.
Okay.
Yeah, $350,000 house. You know, so you're going to have, probably a payment in the 2000s. I think I said 2,200 or so. So yeah, you got to be around.
Thank you so much. That answered the question. I was trying to get to what was the debt ratio, not how to explain it, but what was the actual number. So
okay,
55.
55.
Under that.
Yeah, that's the max.
Okay, thank you. Thank you so much.
No problem. All right. And my next question is there some advantage to first-time home buyer, non-American arriving from outside? We do have programs, okay, for different levels or different types of citizenship. So yeah, that's another conversation, because there's different types of programs. We even do what's called an I-10 program, if you don't have a social security number, we can do it. All those programs require a higher down payment, and they require a lot of documentation, but they are available. So just get with me if you want to know more about that. I definitely do those, and I have a lot of different lenders. I have access to a lot of different lenders because I'm not a captive lender, meaning I'm not a retail lender. I am a mortgage broker, so I have access to 100 different lenders. They all have different programs, and I can do, if it can be done, we can do it. Okay, I can do it. And the other thing is rates. Our rates are really the best out there because I shop for the best rates. So I'm not captive to one lender. I had another question about, can I have a cosigner? Yes. So you can have a cosigner on a mortgage, just like a car. It just depends on the program. You can get your mom or dad to cosign you, or friend, or whatever the situation is. We can definitely do cosigners. That's not a problem. Another question about a gift. You can get gift money. So family member wants to give you money for down payment or closing costs. Yes. And FHA programs, you can do 100% gift. So none of the money has to come from you, but it has to come from a qualified source. All right. What are interest rates today? Like I said, interest rates change every single day. Tomorrow's going to be a big day. We got some inflation news coming out tomorrow. So the market's going to be moving one way or the other, but rates change every day. They are in the 7s right now in conventional loans, and they are in the high 6s for FHA. And the reason FHA's rates may be lower is because their mortgage insurance is a little higher, so their cost is a little higher. Doesn't mean it's a better deal, but their rates are just a bit lower. So high 6s, low 7s right now. You can pay points to buy down the mortgage rate if you want to. I don't recommend that a lot now because we can refinance later. There is something called a 2-1 buy down that will help you possibly with your payment. If you're interested, I could it's kind of complicated. It's 9:29. We're going on right at an hour, so I don't want to go into it too much. Remember to contact me if you're, we want to just look at your credit. We want to get you into credit repair. The credit repair is a good deal, man. It will get your credit moving pretty quick and get you ready. Worst case scenario is going to increase your score. So if you buy a car, you're going to have much better interest rate. And definitely if you buy a house. Any other questions from anybody? All right. I think I've gone through all the questions. This is my information again. Sean McManaman's my name. You can call me anytime, text me, follow me on TikTok because I'm getting into TikTok. I know it's kind of weird, but I am, because I'm doing videos on TikTok. I get a lot of views on those, and I think people are looking for information. I'm not, like I said, I'm not dancing. I'm not doing it because you don't want to see that. You don't want to. I'm not funny. I did do one role play, kind of a day in the life of a loan officer. I'm going to do those because you'd be amazed at what people do during a transaction. But and that's the only way I try to be funny. But anyways, yeah, reach out to me anytime. I recorded this. I'm going to send this out to the ones who are on this call. I'll have your emails, and I have phone numbers. Some people don't have their names, but I have everybody who signed up, and I'll be able to see who showed up. And you can watch this again if you want to, but feel free to reach out to me. I'm available to help, happy to help, no pressure. Just get you ready to buy a house. I specialize in first-time home buyers. I enjoy helping people get into a home. I do make money doing it, but there's really nothing better when I map out a strategy, and then 3 months later they're ready, and then 4 months later they're in a house. It's a great feeling for me to help people. So I'm here to help. Hope you guys have a great night. And once again, reach out to me if you have any questions. Thank you very much, everybody, for attending. I'm sorry for the confusion on the time. Don't know what happened, but you all take care and have a great night.
Thank you. Good night.
Thank you.